Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod.
I come from the middle class, and I will never forget where I come from.
How is business responding to Vice President Kamala Harris's policies? From pay your fair share to a corporate tax rate that encourages innovation. Johnson & Johnson is a nearly $400 billion giant in pharma. CFO Joe Wolk joins us.
If you want a strong economy, keeping investment here in the U.S. and adding to it, 21% seems to be the fair rate.
And Charles Phillips, former tech exec and Wall Streeter, he's advising the vice president on reaching a critical group of voters.
By far, the 1, 2, and 3 issues in the black community, it's all economic. It's inflation, it's economy, it's jobs, it's housing.
All that, plus today's top stories, the Fed fight over 50. Some companies still trying to get workers back in the office, Tesla's robot renaissance, and watching Israel for retaliation against Iran.
If you continue to mislead your allies to such a point, they're no longer your allies. Exactly.
It's Tuesday, October 15th, 2024. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody, and welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. And here we go. The Dow rose by 201 points to a new record yesterday. The S&P was up by 0.75%. It also closed at a record high. It's the 46th this year for the S&P. And then the NASDAQ was up by about 0.9%. NVIDIA shares closed at a record as well, up by 2.4%. For the month of October so far, that stock is up by more than 11%, so a real run that we've seen, actually up by more than 12%. Crude oil falling this morning as a Washington Post report yesterday says that Israeli Prime Minister Benjamin Netanyahu told the Biden administration he is willing to strike military targets rather than oil or nuclear facilities in Iran. WTI down by about 5.4%, but just in the last half hour or so, we have heard a response from the Prime Minister's office in Israel. The Israeli Prime Minister saying that while they will listen to the opinions of Washington, it will not determine exactly what they do, that this is going to be something where they are deciding what's best for their own national interests. So we'll see how this continues to play out. That Washington Post article was based on a couple of sources that had apparently been in the room listening to what was being, asked by the Biden administration of Netanyahu. And we'll see how things play out from here. But you do see that big pullback in crude oil prices.
It's like it's weird that you would telegraph your intentions either way.
Well, it was not coming from Netanyahu.
Right, but to let the other side know what your plans are before you do it, it almost sounds like you're, it doesn't sound like the way you'd really conduct a serious
No, part of this
war.
was because of the U.S. elections that are here.
Right.
In the article itself in the Washington Post, it laid out that this would be something that would be helpful to not have something very decisive come before the U.S. election. The idea that this could have an impact on how the election plays out here.
And then
I
could say you could see, if you really are serious about what you're doing here, you could even see Netanyahu or someone leaking incorrect information so that the enemy wouldn't know exactly what your plans are one way or another.
Well, but there's the issue of what are you telling the enemy, right? You don't want to tell the enemy, but then there's are you going to tell your allies? And are your allies either going to tell the enemy or is it going to get out in some other way?
You mislead your allies so that the enemy doesn't.
Right, but the other issue is if you continue to mislead your allies to such a point, they're no longer your allies. Exactly. Because, and these are our allies that some level there were,
unless you have different,
doesn't work otherwise.
Unless the allies are different in 21 days.
And we don't know exactly who the sources are, 2 sources who told this to them, but every source has their own intent and what they are hoping to get by leaking stuff like this. So add that to the mix.
Federal Reserve Governor Christopher Waller signaling yesterday that future interest rate cuts would be less aggressive than the 50 basis point move in September. That leaves either 25 or 0.
Right.
Could either be a pause or 25. He cited recent reports on employment, inflation, GDP. I guess it could be up 25. Probably not, though. And income that indicate the economy may not be slowing as much as desired, which is a strange thing to say, that we're trying to slow the economy. He did not commit to a specific rate path, but said his baseline calls for reducing the policy rate gradually over the next year. This is exactly what we've been thinking, given that strong jobs report that we had and the new records in the stock market. And people even sort of rationalizing why they did 50, because there was a catch up from not doing 25, so it really wasn't 50. It was like they didn't do 25, so we're catching up with that, doing another 25, and now we're going to watch and recalibrate.
Yesterday, Roger Ferguson was with us. He's the former vice chair who's been really good on all of these things. At that point, yesterday, when we asked him, he said, I specifically asked him if a pause was on the table. He said he didn't think so.
So I think there's not much consensus for a pause right now. That may emerge over time, but based on the data thus far, I suspect most people are going to go into the meeting thinking 25 basis points is the next thing.
He wouldn't have dissented, but he didn't like the 50.
Right.
But he would not.
Right, because he wanted 25.
Right.
Yeah.
Right.
But he would not have dissented so everybody can get along.
Well, he wanted 20. He was betting, but it wasn't that he wanted 25. It was also he was betting on 25.
Right. It was strange.
First little hiccup from our friend Roger.
But no, it was a little bit strange. And then the data didn't confirm it, especially neither the jobs data nor the inflation data, which was a little bit hotter.
You can have your own personal R2D2 C3PO. At scale, this would cost something like, I don't know, $20,000, $30,000. Probably less than a car.
Tesla used humans to remotely control some capabilities of its Optimus robot prototypes at last week's We Robot showcase near Los Angeles. That's according to a Bloomberg report citing people familiar with the matter. They said the robots were able to walk without external controls using AI, but employees oversaw many of the humanoid machines and attendees of the showcase. A video posted online purportedly shows an Optimus bartender at last week's Cybercab event acknowledging that it was being assisted by a human.
It's still doing all those things, but it's like more remote control than autonomous.
Yeah.
Yes, if you're going to split hairs.
It actually reminded me, I was there when we launched WSJ.com, and it wasn't ready to go when they were doing the press release.
Still a big leap from the guy dressed in the stupid suit a couple of years ago. I mean, you could see from the waist. They were definitely machines.
I think the point that this piece, though, is raising is whether this is false advertising.
Right. Looking like it's listening and reacting. And
many years ago,
and
there was
shares trade based on it.
And the shares trade based on it. But I was going to say even more than that. Years ago, and I'm not putting it in this category, but the Nikola case. Which was about a prototype that was not really doing what it really wasn't what it was. And so the question is, are people buying into these shares based on a view that something's happening that's not really happening? I don't know.
Yeah, it's interesting.
It's next one. It's not Coty's.
No, Coty. Shares of Coty are falling this morning. The parent company of Covergirl warning that comp store sales growth will probably come in below its prior forecast because of a slowdown in the United States. For the fiscal first quarter results that are due, they're coming out on November 6th. The cosmetic maker said that very tight order and inventory management by retailers resulted in weakness in certain markets. It is maintaining its full-year target, saying that it expects some acceleration in the second half of its fiscal year. And, of course, Coty is the maker of Covergirl. So makeup sales being restricted.
Do some rebranding. I mean, never liked that name. It's too close to Coty. Cooties, isn't it? Especially for personal.
I never thought that, actually. Before.
You never thought of Cooties when
No.
you see Coty?
No.
No, I think they need to rebrand. I'm not a branding expert. Would your kids use that term? They probably never even heard that term, have they?
Which?
Cooties. I mean, that's a boomer. That's probably like does Kyle know if someone has cooties?
Yeah.
He does.
Yeah.
Do you think Max and Henry? They probably. Will you
we
ask them for me, Sydney? You will.
I will.
Say,
ask.
are you familiar with
You know what I will do in this day and age?
Yeah, you can do.
I will text
Say, have you ever looked at one of your?
The way we communicate.
You ever looked at one of your classmates and said, "Oh, you have cooties"? I don't think it's used anymore.
I know because we talked about it when COVID first broke out.
You did?
Yeah. That's how I know he knows.
You get cooties.
Automaker Stellantis bringing workers back to the office. This is now a story we keep hearing. and reversing their work from home policy. It comes after its profit warning prompting a shakeup of top management. The makers of brands including Jeep and Chrysler now want staff in the office an average of 3 days per week. It previously, Joe throws his hands up. 3 days, allowing employees to spend 70% of their work time remotely. That was the previous plan.
Not going to take it.
CEO Carlos Tavares praising remote work following COVID lockdowns and drastically reduced office space and sold real estate assets to cut costs.
So that's interesting. They got rid of the office,
right,
so there's not a place to come back to.
Less places to come back to. What are you going to do when you come back? No, this is a real thing.
I know, but it was just funny the way you said that. It's like, oh my God. And then now demanding you give it back 3 days a week.
The problem becomes for people who have moved far away,
right,
figuring that they can do this for forever.
The car company, I don't know. Seems like it would be good to
Well, no. The factory people have always had to be in the factory.
And that creates a problem, too.
We're not talking
about.
These are the middle managers that don't do anything anyway. So I guess it is possible they could.
Well, I mean, this has created a problem in a lot of workforces where you have white-collar employees, blue-collar employees. Blue-collar employees have been there throughout 5 days or 6 days, whatever they work throughout. So
it'd be a good answer to, income inequality and strikes and everything else. Why not give all the middle managers' salaries to the people that are actually responsible for the product?
We've always figured that eventually when the economy turned down, it would be the people who were working from home who bore the brunt of the layoffs that came first.
The ones that are totally superfluous, middle managers. Except for ours.
Presented with no comment.
Yeah.
Coming up next on Squawk Pod, Johnson & Johnson CFO Joe Wolk. His company is out with quarterly results, but it's his perspective on another set of numbers, the corporate tax rate, that got us squawking today.
I do think we have to address maybe longer-term concerns around the deficit. If you wanted to go to 15%, I think you go beyond simply maintaining investment here in the U.S. and actually maybe incentivizing companies from other countries to locate here.
This is Squawk Pod.
Up and Becky, Q.
Johnson & Johnson shares trading higher on better than expected results this morning, also upbeat guidance. Joining us right now to talk about it is J&J's Chief Financial Officer, Joe Wolk, who's also a member of the CNBC CFO Council. And Joe, welcome. Thank you for being here today. Let's talk about the performance of the two divisions that you have. The first would be pharma, the second would be med tech. And it looks like pharmaceuticals in particular performed very well, a little better than expected, with operational growth up 6.4%.
That's correct, Becky. Good morning. It's great to be with you. We were really pleased with the overall company performance in the third quarter. I want to thank all of our associates across the globe that made that happen. It was driven by pharmaceuticals that enabled us to handily beat expectations on the top, bottom line, and then generate free cash flow that was very strong at $14 billion year to date. The pharmaceutical unit had 11 of 13 key products growing at double digits or more. Another record revenue quarter for them at $14.5 billion, addressing serious issues across the market with our in-market products. But while the quarter was good, we're really pleased with what we solidified for the future, getting approvals, 5 approvals in all, addressing serious diseases like multiple myeloma, bladder cancer, lung cancer, and inflammatory disease such as ulcerative colitis. So we really solidified the future there. MedTech also solidified their future. We advanced our digital robotic general surgery platform for regulatory approval. And we also look forward to our pulse field ablation catheter for treating arrhythmia in the coming, let's say, weeks or months. That unit performed about 6.5% growth as well. That includes the acquisition of Shockwave, a business that we added back in late May to address calcification of vascular disease. And that without that, we would have been closer to 4%. That's a little bit below our expectations. We had some headwinds in the Asia-Pacific region, specifically with slower economies in China and Japan, as well as a prolonged physician strike in Korea. But overall, we're very pleased. While it's not perfect, it really speaks to the strength of Johnson & Johnson that we're able to miss on one part of the business, but still raise expectations for financial performance for the balance of this year.
Yeah, for your adjusted earnings per share, you're now looking at $9.91 for the full year. That's actually down from $10.05 previously. There's a charge of 24 cents that the street didn't know about before for the V-Wave acquisition, but there is a 10-cent bump in improved performance, operational numbers that you're anticipating. And again, that's coming mostly from the pharmaceutical side of things?
It's a combination of things. So we are managing our portfolio extremely well. We're also improving operating margins. We had high leverage on our SG&A costs through the year, really a testament to the organization and not allowing stranded costs from the Kenvue separation to creep into our P&L. And we're, I think, really living into deploying that next available dollar towards R&D, even without that charge of $1.2 billion that is classified on the R&D line. We increased as a percent of revenue our overall R&D investment. So while the quarterly performance is good, we manage for 3, 5, and 10 years, and we're putting our money where our mouth is in that regard.
Johnson & Johnson, or Barron's comes out with a headline on this that says Johnson & Johnson reports strong earnings, but the talc worries remain. It points out that the stock's up 3% for the year to date, but it's down 1.7% over the last 2 years versus the S&P being up 63.5% over that same time period. So what's the update on what's happening with the talc situation?
Yeah, so, Becky, we continue to make progress with the talc litigation matter. I will emphasize to your viewers that irrespective, and don't get me wrong, we want this responsibly behind us, but we still generate enough free cash flow to continue to do the things that will strategically position us. It was decided that the bankruptcy court will be hearing the case in Houston over the coming weeks and months. This time is a little bit different than prior filings with respect to we have 83% of the claimants believe this is the right path to go. So if you think about bankruptcy law, its intent in this particular instance is to maximize potential for recovery while preserving otherwise viable businesses. We think it fits right into that. There are a few holdouts that haven't come along, obviously, when you only get 83%. But those holdouts, unfortunately, will personally gain either their firms or them individually financially. And we're real pleased that Senators Cornyn, Comer, Tillis, as well as Representative Ice are looking into some of the plaintiffs' bar tactics, specifically around third-party litigation funding.
Joe, the last time you were on, we talked to you about what you've done with some of the additional proceeds you've seen since the 2017 tax changes that cut corporate taxes. You've made the point that you've reinvested that money. We do have an election coming up in just a few weeks, and there are questions about what will happen to corporate taxes. What happens if corporate taxes go up to 28%, as Kamala Harris has recommended, versus staying where they are right now?
Yeah, so I think 21% is, quite frankly, the definition of fair share. It's square in the middle of economically developed countries and where their tax rates are. In fact, you may argue that with state taxes, the U.S. rate is actually a little bit higher. We have, as I mentioned in the last quarter call, added about 6,000 jobs. We were pleased to announce on October 1st the building of a new drug supply facility in North Carolina. Not only will that add 400 jobs to Johnson & Johnson's employee base, but there's estimates by the state of North Carolina that every job Johnson & Johnson adds results in about 4 to 5 jobs additional in terms of construction, electricity, plumbing, security that will happen in North Carolina. So we think this is very positive. I also look at what the CBO recently reported. So back in 2017, before the passage of the Tax Reform Act, the estimate for 2024 corporate tax revenue was about $405 billion. What came in 2024 is actually $529 billion. So it made the pie bigger. From my perspective, if you want a strong economy, keeping investment here in the U.S. and adding to it, 21% seems to be the fair rate. We are looking at another facility that is actually a little bit more advanced in terms of technology with respect to cell and gene therapy. If a rate goes to 28%, I think it's going to be very difficult to put that facility here in the U.S.
Joe, there's, depending on who you are and where you're sitting there, there's different claims. And the claim is that no corporations really pay the stated rate anyway, and there's ways to get around it. So it's really not 21, it's actually less. They don't pay 21. And the other one is that if it does go to 28, if you add in state taxes, I've heard people that want a lower rate say we'd be one of the highest in the world if we went. 28 doesn't sound bad. Others say that 25 is what the business community would have settled for. But if you had stayed in at 28, would we be one of the highest in the world?
Absolutely, Joe. Anything over 30% would put you in, if not the upper third, maybe the upper quartile of tax rates for economically developed countries. So that's why we hear a lot of talk about fair share. I think 21% is actually the definition of fair share. You could talk about. Go ahead.
What about 15? We can go. When we talk about raising rates, I always want to know, well, where do you think it really does take a bite? How about lowering rates? Where would it actually be, where it'd be non-productive because it's so low? And do you think it's a good idea to make it for domestic producers only at 15%? Isn't that that just sounds like industrial policy where you're.
Well, I think you have a lot of multinational companies based in the U.S., and you want to preserve their rights as well as those who produce domestically. In terms of 15%, Joe, on its face, certainly I would like that as a CFO of a multinational corporation. But I do think we have to address maybe longer-term concerns around the deficit. If you wanted to go to 15%, I think you go beyond simply maintaining investment here in the U.S. and actually maybe incentivizing companies from other countries to locate here. If you think about why one of the main arguments in 2017 about the lowering the rate was to stop inversions. You could think about that in a I'd say a pro-business manner where you can get some inversions coming here.
Then why not do? I've always said go to zero.
You have to worry about the deficit, Joe. So when you hear about panels that may look at how we're spending the tax revenue, the increased tax revenue that I just mentioned earlier, I think that's one of the best ideas I've heard in the last 20 or 30 years. I think that's really what would enable a 15% rate. I don't think we can go there now simply because of the long-term impact of a deficit, where debt service is actually more constrictive on the federal budget than Medicare or national defense.
No, maybe we go to 15 and then do Andrew's billionaire, when they take a loan, you tax that, not unrealized, but maybe you get it somewhere else. I mean, I always think you ought to, find it somewhere else. We're competing in the rest of the world.
Everybody thinks we got to find it somewhere else.
Yeah, but that's the point. There's not enough places to go.
With billionaires there are, and we'll start.
There really isn't.
We'll start with Joe Wolk
that's
right
just
now.
one
that's
part. No. The billionaire piece is just one piece of the puzzle. You're going to have to do so many things on the. You're going to have to raise more revenue somehow, and you're going to have to cut costs.
Or you let Elon Musk shrink the government down to about 10% of the size of it is right now.
You still have entitlements. You still have debt servicing.
You do.
Things that will.
We got to fix it. We got to fix not just entitlements, but I think we got to. Bill Clinton did a great job with welfare. It'd be better if everyone was working. Would it not, Joe? If everybody was working, we got a lot of safety net payments that probably could be streamlined, and it'd be the dignity of work. Everyone would like to do it if they could. No one wants to sit at home for $62,000 a year. Doing nothing.
I can't comment. That's probably over my skis with respect to whether everybody should work. But I know that we've added jobs since 2017 based on the tax rate where it stands today.
Yeah, I don't think this is a welfare state problem at the moment.
Well, I'll send you an article.
Okay, please.
Hey.
You saw it, the one that Phil Graham wrote.
Hey, Joe.
I'll send it to you.
Yes, Becky.
Thank you very much for joining us this morning. We
he
appreciate
didn't anticipate we're going down all these roads, but thank you.
We do appreciate it here.
He's not woke, so we can ask him these things. Wait a minute, you are woke. To update you, it was from last month, and you remember we just had the chairman of the budget committee on last week, Jody Arrington.
If you look over 10 years, we're going to add over $20 trillion to the national debt. We're paying over 50 cents on every dollar just to service the debt.
Article by him and Phil Graham, and I sent it to you. Welfare is what's eating the budget. Means-tested programs, not Medicare and Social Security, are behind today's massive debt.
Okay, well, let's take a look at it. I'm all
I sent it to you.
I'm all for reducing.
I sent it to you, and the numbers are staggering in it. But the argument is that we could probably fix Medicare and Social Security if you did it. Medicare might be tough, but Social Security we know what to do. right? It's just going to be people 3 decades from now might have to be 70 before.
Well, we've been talking about that forever.
I've always but we don't do anything.
But I'm very happy to meet Social Security. But I don't think that's as a welfare program.
No, they're not. They're talking about actual other stuff. Yeah,
we've talked about this too, and obviously you don't want people who don't need to be on those programs on them, but at the same time you don't want to throw people off who have disabilities.
Well, right now the bottom
bottom
quintile are making that aren't working are making the same amount as the second quintile. All of them who are employed,
I don't know that
they're making the same amount of money.
I don't know that you want a Twitter firing round sort of way of going through and doing it. Hopefully there's a careful way to do it.
I'm sure
there's people who shouldn't be there.
The government would be, just in general, I think we could do with the government. I mean, I'd like to see what Elon Musk would come up with for that. But he's, like I said, to a certain, suddenly he's the Antichrist to half the country. It's bizarre. You saw what they said. You liked that, didn't you, watching that? I don't think Biden said one word about capturing that booster as it landed. Not a word about, wow, that was kind of cool, right?
That was very cool.
Yeah, because of the union issues and the EV stuff.
Well, I think now it's become such a terrible situation.
But in terms of politically,
where you have...
You can't say it.
Well, you have Elon Musk out there now
jumping
both
up and
supporting
down.
Former President Trump and criticizing
the
president. And by the way, this started, as I told you, I have an alternate reality view of the universe, which is that,
I know that.
Had Biden not... my alternate...
We've been together a long time.
My alternate reality is, had Biden embraced Elon Musk early on, in the very beginning, I think that things could have been very different.
Teases next.
Still to come, another business leader's perspective on Vice President Harris as president. Charles Phillips is on the boards of Amex and Paramount Global and is co-chair of the Black Economic Alliance. He's talking to Black male voters, absolutely pivotal in this election. And he's talking to Harris herself. He says she's listening.
Myself, Mark Cuban, Aaron Levy from Box, we all kind of talk all the time. We gave her a few white papers on these very topics and say, this is what we're hearing in the business community. We're pushing her in that direction. I think she has a long record of kind of hearing different things from different people and making great decisions.
And we're back. You're listening to Squawk Pod. Election Day is just 3 weeks out, and polls show an extremely tight race between Vice President Kamala Harris and former President Donald Trump. In this home stretch, the Vice President is making a specific appeal now to Black male voters, outlining policy proposals, talking about job opportunities.
We will build a future where we have what I call an opportunity economy, where everyone can compete and have a real chance to succeed, not just to get by, but to get ahead.
About 90% of Black men voted for President Joe Biden in 2020. A New York Times Siena College poll just out showed Harris getting 78% support from Black men, with 15% saying they plan to support former President Trump this time around. We hear today from Charles Phillips, co-chair of the Black Economic Alliance. He is a tech entrepreneur and former Morgan Stanley banker who went to work for one of his clients, Oracle, and he's known Kamala Harris for many years. Now he's playing the role of emissary for the vice president's campaign to the business community. He joined Joe, Becky, and Andrew on the Squawk set today. Becky takes things from here.
Charles, thanks for coming in today.
Glad to be here.
Let's talk a little bit, first of all, about why you are a supporter, why you're coming on today.
Well, I've known her since 2003 when I lived in the Bay Area. When we started the Black Economic Alliance, there were 2 senators that joined us, 70 business people and 2 senators. One was Cory Booker. The other one was Kamala Harris in 2017. So she's been working on these issues about the black economy for a long time. And to me, she has receipts on this. And so I think she's authentic. She has some good ideas. She surrounds herself with smart people. A lot of ideas that come, some are good, some are bad, and she's good at kind of deciphering which ones to go with.
There has been criticism of this plan that's just being rolled out 3 weeks before the election, that this is because her poll numbers are down with Black men.
She only had a few weeks to jump into the campaign, get policy together. She didn't know she was going to be running, and you have a lot of different constituencies in the Democratic Party. Everybody wants to, something custom for them. So she had a lot to do in a short period of time. And you're right, there's a problem in the black community, especially with black men. And so she's addressing it. And we polled them and asked them, who would you listen to on this topic of the economy? And 35% said other black business leaders. Only 5% said celebrities. So we said, okay, we'll tell you what we think. You can vote, decide yourself. But if you want to hear from black business leaders, let's try to help.
So what do you think?
I think she has some good ideas. I mean, no one's addressed housing in a long time. That's a big issue in the black community. Only 40% of the people own homes. She wants to build 3 million homes in the first term in office. So I think she has great ideas, and if people hear her talk about them, she can earn their vote. But now the good news is the fact that everybody's focused on it and wants to hear from black men, that's a good thing.
It's interesting, Charles. There's an interesting piece in the Journal. It's kind of a bizarre piece.
I thought you might have read that, yes.
Yeah, I only want to focus on the pot part. I didn't want to touch that with the 10-foot pole. But the Journal throws a compliment that it is, and providing capital to minorities is a great idea, because it's not just redistribution. It's starting businesses. But it points out that there would be forgivable government loans, which are basically grants, because they'll probably be forgiven.
Agreed.
The Journal wonders whether it's constitutional to do that just for a minority, to select one. Would that pass muster, do you think?
Likely not. Most of the ideas she has will help everybody, the entire economy. And so my guess is that'll be loans for small businesses, period. Right. And so if you can make sure that there's no discriminatory behavior and it's accessible and opportunity zones, great, everybody benefits.
Let me ask you just one other thing, and these are all interesting things to point out. In our intro, we said maybe the Harris camp is worried that black men stay home. Okay, that's one thing. I think some black men are voting for Donald Trump more than in some past elections. And the Journal ends with, it's good news that Ms. Harris and Democrats are being forced to compete for black voters who look fondly at Trump's first-term economy. So I don't think it's just like we said in the intro that they're not going to show up for her. He has made strides, according to some, that remember fondly his first presidency in terms of the economy.
We've done a lot of focus groups on this and asked what they remember. What they remember is the stimulus checks with his name on them. So we tell them that
was same old back then.
Yeah. It was smart for him to do, put his names on the checks, but that's a one-time deal. That was related to COVID. Don't expect that if you vote for Donald Trump, you don't get those checks again.
You don't think it was just organic wage gains that were better under Trump than under?
There were wage gains also under Biden as well. So
we're not back to even yet.
Well,
real wages.
Wages are growing faster than prices right now. Over the last, finally, that's happening. Okay. And so COVID distorted the Biden record, it distorted the Trump record as well. Some good, some bad. So we just put it in context.
Charles, I want to read you something. This is from the New York Times. This is David Leonhardt. The Democratic Party has spent years hoping that demography would equal destiny. As the country became more racially diverse, Democrats imagined that they would become the majority party thanks to support from Asian, Black, and Hispanic voters. The politics of America, according to this vision, would start to resemble the liberal politics of California. It is not working out that way. And part of what he goes on to say is it's not working out that way because it's actually not about race. It's about economic class. And that actually the working class and the lower rungs are actually moving more towards Republicans than towards Democrats. And that it actually is not a racial issue or diversity issue at all, but it's, as we just described, and here we are on a business show, about economics. What do you just make of that analysis?
We polled this issue by far, the 1, 2, and 3 issues in the black community. It's all economic. It's inflation, it's economy, it's jobs, it's housing. And so the issues they've identified are correct. The fact that they have to earn the vote for black people and black men, that's a good thing. That's what we've been saying all along. Right. Tell us what you're going to do for us.
But what's so interesting about that is the distinction between the idea that Republicans are for the blue-collar worker and the Democrats are for the white-collar worker, right?
Right.
I mean, that's become the new sort. I don't know if it's new. Maybe it's old.
Right. Well, we're trying to put that in context. Part of the reason they think that is because of those checks that they received before, and also inflation. They blame that on Biden. We kind of explained that started with those checks under Trump and continued and accelerated under Biden, but both of them are responsible for it.
Right.
But you had to do that. When you're crash landing the plane, as Tim Geithner used to say, you don't skimp on the foam on the runway. We didn't know where the economy was going to go, and so probably there was too much stimulus, but you'd rather have that than a recession.
Hey, Charles, business leaders in particular, it's been probably a little harder this time around to find business leaders who would speak out. Part of that may be because Kamala Harris came in so late to the game, but part of it is probably a reflection of things that business leaders will tell you they feel uncomfortable with. Talking about price gouging, thinking that grocery stores are gouging people and that's why we have these inflationary prices. Higher corporate taxes, granted 28% is lower than what President Biden was proposing in his campaign. Things like bashing the wealthy. I mean, those are the things I've heard back from corporate leaders that make them a little uncomfortable with it. How do you explain to them that you think this is the right choice anyway?
I would say she's listening to all that. Myself, Mark Cuban, Aaron Levy from Box, we all kind of talk all the time. We gave her a few white papers on these very topics and say, this is what we're hearing in the business community. We're pushing her in that direction. I think she has a long record of kind of hearing different things from different people and making great decisions. So she's cognizant of these issues.
Charles, earlier we were talking, and I sent you the article on, Phil Gramm and Jody Arrington's take on some of the ways to get government spending under control. And when you say welfare, it's almost racially tinged, and people immediately said it was. So I just looked it up, and it's weird. 43% white welfare recipients, 26% Hispanic, 23% black, which just begs a question. What about the 46% of the welfare recipients that aren't eligible for the $20,000 grant? So it's a weird...
We have a lot of distortions in the way we allocate federal funds. You could call the tax code stimulus. The fact that companies only pay 9% effective tax rate, specific industries get specific subsidies, that's a government subsidy as well.
Right, right. I mean, I understand how things need to be done because it's not working.
But, one of the things
it's not working fast enough.
No, but we were talking about welfare before and
right.
trying to reduce welfare. But the truth is, you can go and look. Employees, big percentages of employees who work for Walmart, big percentages of employees who work for McDonald's. You can go through the list, and there's been studies on this, right? Are employees who are getting welfare. That means that the taxpayer is effectively subsidizing those companies. So when we then have a conversation about what the corporate tax rate is supposed to be, or what the individual tax rate is supposed to be, at some point you have to start to incorporate these issues and say to yourself, the taxpayer is subsidizing these companies, and therefore should the companies be paying, either the company should be paying a higher salary, which we'd all like, to these employees, or you have to think about it a little differently. I only raise that because I think we're all talking about these very complicated topics.
She has a great idea you guys aren't highlighting on employee stock ownership programs, which is probably, a third of the employees could potentially own stock in the companies that they work for, but the tax code doesn't incent that. KKR has done a great job doing this. I'm sure you've seen them on 60 Minutes and other shows. Share it but the tax code has support that. Share that more employees with owning stock ownership, and she has that in her plan.
Well, you should talk her into coming on. And you said you've tried.
You're going to be nice to her?
Well, Trump canceled, and he was going to come on. So, and I said, when you come on, we'll be able to say you came, and I didn't talk to him personally, but I said, we've offered the vice president, and she's not coming on, but you are. Now he's canceled. So now she could come on, and we could say we offered it. Trump can't, but they're not.
All right. Can Becky ask the questions?
I think you might like Andrew. I think you might like Andrew posing those questions. He's got some good ones. How do you do it?
Oh, stop. Charles, thank you very much for coming in.
Thanks a lot.
And that's the podcast for today. Thanks for listening. With just 21 days till November 5th, please be sure you are ready to cast your vote. Go to nbcnews.com/planyourvote. NBC News, plan your vote, for an interactive tool. Put in your state, put in your address to find polling locations, hours of early voting, even links to sample ballots. Be prepared. Be a part of things. Plan your vote. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern. To get the smartest takes and analysis from our TV show right into your ears, follow Squawk Pod wherever you get your podcasts. That's it. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.